Yeah, it's your boy Crypto Blood, and welcome to another episode of Mine 2 Satoshis. It is March 21st, 2019. Shout out to my man, Life Size Box, for the song request. Swollen Members, Block Party. I like this joint right here. And just to let you guys know, if you ever want to send me a song request, two things I want to let you guys know. One, if you want to send me a song request from now on, you have to do hashtag song request in the comments of any of my videos, and I will make sure I post them. Secondly, anyone who has submitted a song before today, I'm about a month and some change out as far as a queue. So just kind of keep that in mind. I know people send me song requests all the time, so just keep that in mind that I'm about a month behind. But again, going forward, please add the hashtag song request, so I will make sure I put that in the queue. What's good, people? Hope you guys are doing well today, and welcome to another episode. You see I got my A's hat on today. Shout out to all the Atlanta people out there. Today, though, we are going to be looking at an article that really is not shocking, right? But it's just interesting to see, and I wanted to report on it. There's a new report that suggests that almost 90% of exchange volume is manipulated. You know, what does that mean for Bitcoin? Well, I'll tell you one thing. That probably means a lot of the volume that we see on a day-to-day basis is not a true reflection of the activity on, as far as exchanging different cryptocurrencies for one another. It's probably overinflated. And also this leads to, if the volume is manipulated, then there's probably a lot of wash trading as well. So tapping out of different positions, just stop loss hunting, all that crazy stuff. So we're going to take a look at this article, and this one is out of Zai Crypto regarding that manipulation of volume on these exchanges. Over 90%, it says. That is absolutely crazy. Speaking of exchanges, there's another little quick article I'm going to read to you guys that is a bonus article, and it's referring to whales that have moved some Bitcoin over 103 million over, I think, the last couple of days. So this little drop that we've seen in Bitcoin could be, and Bitcoin in the crypto markets could be a result of this whale moving money to Poloniex. We'll take a look at it. It was both Bitcoin and Ethereum. Big moves as far as dollar amounts moved to exchanges over the past few days. The second article, though, is an exclusive one out of BitcoinNews.com. Looks like a college student has cracked, or at least he claims he's cracked, the Bitcoin mixing service algorithm. And I told you guys I've always been a little suspicious, or I should say cautious, of anonymous coins and mixing and all of that, tumbling, because we're dealing with a blockchain. If that information or the method in which encryption for these types of services were done, man, if it's cracked, then you'll be able to see everything, because it's all permanently saved on the blockchain in those ledgers. So this one is, again, interesting, and I thought you guys would find this pretty interesting as well. This young college kid cracking the algorithm for Bitcoin mixing. So we'll take a look at that. That's not a good news. Hope he doesn't get bought out by the government. They'll love to have that type of information if they don't already, to be honest with you. Let's go ahead and take a look at this market cap. We're currently at $138 billion. Bitcoin's dominance, 51%, up a little bit. You see we've dropped a bit in the market cap. That's typically what you'll see. Even though this drop was maybe only about 2%, 2.5%, it did kind of concern me, because it did break below a threshold from a market cap perspective that I didn't like. And there you have it. That's where we are. If this holds, then we're going for this area right here. And so that area is your, $134 billion. That's where we should see. So it's only $4 billion away. That's probably where we will end up and hopefully bounce off of. But yeah, that break of this floor here, this support area, was a little concerning. I think we'll take a few steps backwards at this point. If we can't keep that area right there, the next area is going to be this area, which is the 131 billion. So again, not too far away and is a realistic support area. Bitcoin chart, same thing, just sporadic. I mean, it looks like a Bart Simpson, to be honest with you. If you take a look from where it went up, this area here, all of this, we essentially just almost like wash trade that whole section. So that's a net zero to be, or close to it. We've bounced off of the lows there. We've kind of headed that back up, but nothing really happening here. Every time I do a video, this is the area we have to see a break above. And a lot of wash trading going on, nothing really happening here, and we'll just keep an eye out on it. First article is out of Xi Crypto, and it is about this manipulation and wash trading going on. The report suggests that almost 90% of exchanges volume could be manipulated. After the 2017 crypto boom led by Bitcoin, there were accusations that a few parties, including one major exchange, might have manipulated Bitcoin prices, triggering the surge. This was a fairly damaging report, and its implications continue to be felt since it surfaced. The market might just have to prepare for another hit, as a new report has just been published, and it suggests that nearly 90% of the volume exchanges claim to have moved could be manipulated. According to the researchers who based their research on analyzing traffic on the exchanges, nearly 75% of the reported volume could be doubled. Wow. The researchers from startup TIE went ahead to compare the near $600 weighted average trading volume per user visit leading exchanges such as Coinbase Pro, Binance, Kraken, Gemini, and apply it to other small exchanges. By doing so, they found out that exchanges like Coinbean, BW, ZBG, BitMax were reporting volumes 10 times higher than expected. Notably, US exchanges and Binance volumes were in order. It says here from the report, if each exchange averaged the volume per visit of Coinbase Pro, Gemini, Poloniex, Binance, and Kraken, we would expect the real trading volume among the largest 100 exchanges to equal 2.1 billion per day. Currently, that number is being reported at $15.9 billion a day. Although notable exchanges such as Binance have proven themselves to be genuine, bad actors continue to shed a bad light on the industry. New investors will want to know that exchanges are trustworthy before choosing to invest through them, and a report that exchanges have been manipulating volume only pushes them away. Despite the negative announcement, Bitcoin is not expected to react since the top exchanges, which have always had the most influence, have not been implicated in the report, which is a good thing, I would say. With volatility now significantly down, many are expecting a bullish move in the short term. Additionally, Bitcoin's dominance is still down, standing at around 50.8% at the time of press, which signals many investors have moved to altcoins, yet another bullish signal. So I don't know. I'll link to the actual article, and it's out of Forbes, about this report that Ty did. But, it's possible. I think it's probably going on, to definitely give Bitcoin and other cryptocurrencies a false demand as far as from the trading perspective. I can see that happening for sure. So I'll leave that link. You guys check it out, read it, and let me know your thoughts about it. It's funny, though, because I have another article here that talks about some whales moving over $100 million in cryptos over the last couple of days. I wonder if this has anything to do with this drop we've had today. It says here, Bitcoin and Ethereum whales move over $103 million in cryptos as Bitcoin briefly crosses 4,100, and this was put out prior to the drop we've seen. It says crypto whales are moving millions in Bitcoin and Ethereum as the price of Bitcoin swings above and below the 4,100 area. According to the price tracker World Coin Index, BTC surged as high as 41.43 within the past 24 hours. Bitcoin then quickly dropped below the 4,100 mark and is now at 40.36 at the time of publishing. Well, it's actually now currently at recording time 39.76. So as the price of Bitcoin becomes more volatile, Bitcoin and Ethereum whales are surfacing at a rapid rate. In the last day, Wells transferred over 17,000 Bitcoin worth $69 million across 12 separate transactions. Meanwhile, 3 Ethereum Wells moved 250,000 Ethereum worth $34 million in 3 transactions. The largest Bitcoin transfer was 5,000 Bitcoin worth $20 million. It was sent from an unknown wallet to the crypto exchange Poloniex. Of the 17,000 Bitcoin recently transferred by Wells, a total of 7,675 Bitcoin worth around $31 million was sent to crypto exchanges, indicating those traders may be gearing up to sell. None of the Ethereum was transferred to an exchange though. As you can see the list of them here, they've got the top one listed here at 20 million going to Poloniex. And then this list of transfers here is movements to unknown wallets. And then lastly, we have movements from Poloniex to unknown wallets for Ethereum at 31 million. So there's a lot of action going on, a lot of movement of capital. Probably had something to do with this drop here, at least the Bitcoin one of 21 million. So, you know, you had 21 million going to Poloniex, 4 million to Coinbase, 3 million to Bitstamp, and then 3.2 million to Coinbase as well. With such a thinly traded crypto environment we're in right now, that most likely was the cause of the move down that we saw just earlier today. You guys let me know your thoughts. What do you think about the move down and these whales moving money around? Many times these whales are exchanges themselves, not necessarily individuals, but I would love to see what you guys think about that in the comments below. Second article is pretty interesting here. It says a college student claims to have cracked Bitcoin mixing services. A college student has claimed to have successfully cracked the algorithm behind most centralized Bitcoin mixing services. Using his methods, he says he can backtrack all transaction history done by the service providers. In an interview with Bitcoin News, the student explained how he carried out the study to assess the privacy levels of Bitcoin mixing services. In doing so, he discovered vulnerabilities in the algorithms used by centralized Bitcoin mixing services, such that transactions supposedly thought to have become anonymized through the mixing algorithms of such platforms can be traced back to the source. He says that this proves that algorithms being used by centralized mixing services are inefficient in terms of security when compared to either decentralized mixing services or privacy-centric cryptocurrencies. His study proves that the major mixing services tested at the time contained a trivial bug such as timing attacks and leakages that attackers could manipulate to de-anonymize past transactions processed by these services. He further claims that even if the implementation faults were fixed, every transaction processed prior to the fix is irreversibly vulnerable. The article goes on to pose the question, are centralized mixing services doomed? The student's approach involved identifying the characteristics of the transactions, such as version, fee, timing, lock time, sequence number, as well as transaction signing, and how the signing was done by a major mixer at the time, followed by filtering of more than 90% of the blockchain data which were not connected to the mixing process. From the data obtained, he was able to detect the input transactions and the output transaction. His findings bore significant peculiarity because while CoinMixer.se is currently offline, the historic transactions done by the mixing service could still be traced. Moreover, with modifications on the approach, nearly all centralized mixing services out there could be de-anonymized, as he was able to break the transactions done by Mixer.io, Bitblender, and Helix using a similar approach. The interesting conclusion isn't just about the mapping of transactions, which invariably may be of interest to law enforcement, but the nature of mixing as regards to the provider. In the near future, it will be easy to associate a transaction log to a mixing service provider. And then the article finally brings up about privacy coin solutions. It says, knowing that centralized Bitcoin mixing services have a loophole in their algorithms, alternatively, privacy-centric cryptocurrencies may be the best option for users of cryptocurrency. Even though Zcash and Monero have different approaches to achieving privacy, still their algorithms are superior to those of centralized mixing services. The student noted that decentralized mixing services would have been would have also been a good alternative, as they not only remove centralized entities who steal your coins, but also have higher levels of security, since their implementation requires no black boxes. He also thinks that bitmixer.io would have been more secure if it were open source. So, the privacy thing is cool, but again, it's only private until someone comes up with a way to crack those algorithms. Not saying that that's very possible, or the probability of that is very high. So when quantum computing comes on the scene in the next 5 years or so, that's going to be an issue. That's going to be an issue even for possibly privacy coins, in my opinion. So every transaction is at risk, and it has to be secure going forward indefinitely. That's the crazy thing about the privacy thing and blockchains. So you guys let me know, what are your thoughts about this Mixer vulnerability being found by a college student? If a college student can find out about this and discover this, the NSA and all those other government agencies has that already on lock. I don't know, people. You guys let me know your thoughts about this. Thought this was an interesting topic, though. But again, I got to give a shout out to my man, Life Size Box, for that song request. Swollen Members, Block Party. And that's my 2 Satoshis for March 21st, 2019. Don't forget to like, share, and subscribe. And if you subscribe, click that bell. It's your boy Crypto Blood. And that's my 2 Satoshis for today. I'm out of here, people. Ha!